Been a bit of a movement backwards and forwards today on the market. So anyway, I hand you over to Mr. Williams. Tom.
Thanks, Peter. Yeah, Tom Williams here. Lovely to talk to you all. You could probably hear the seagulls squawking away in the background because we're not too far from the beach here, but should be bother us. Be quite honest, I enjoy feeding them. I often throw out bits of bread and stuff, much to Dallas's, my girlfriend's annoyance. She doesn't like it, but there's all sorts of these seagulls come. They got all the youngsters around these days, but I quite enjoy doing that. Anyway, now the markets appear to be uncontrollable at the moment. We obviously appear to be in some sort of bear move, but you can see this is an hour chart here, the S&P 500, and you can see nobody's really in control here. I mean, they marked it up, look, heavily here. If anybody tells me these markets are not manipulated after looking at this, they're not quite sure what they're talking about. They're being rammed up. It turned around, rammed down to the low again. And then the next bar's also being rammed down, right, to close near the high. Now, it tells you one thing, that the professionals are not in charge. Nobody's in control here. And they're just finding their positions here. Now, I noticed that Gavin loves doing these, what we call setups. A setup is a sequence of events on the chart. Usually the one we've been looking at is a bullish one where the market's been falling. You get high volume coming in or high activity. So you know the professionals are interested. They've entered the market. Then what we want is a small sort of rally, right, arcs over and then comes back down to that level and tests. And it should go up. Now, we've noticed that in these bear markets, which we've been experiencing in the last few days, or weeks even, that these setups don't necessarily work. And there's something like a test. When you see a test, you would expect the market to go up after a test. Now, if it fails to go up, then it's a failed test. And that means the market's so weak, it can't respond to the sign of strength. And that's what appears to be going on with some of these setups. There was a beautiful setup this morning on the pound. Right, they had a shakeout. Right, went down and then immediately went up, shot up on very high volume, widespread as it pushed up through supply to the left. Right, so the volume was high, supply to the left, and then it came back down and tested. And sure enough, there was no supply there at that moment. I even called up Rita and we spoke about it because she doesn't necessarily concentrate on the market in the mornings. But it looked very, very positive. But even that failed and it came off because we're in such a weak market. But we'll just have to watch it. But this is the hour chart here of the S&P 500. And you can't possibly take a position in a market like this at the moment. Now, are there any questions about this? Rita's looking at the screen on the other computers.
Okay, Mark wants us to look at the 5 minutes as well, but while we do that in a minute, Oleg asks, if Nasdaq acts stronger than the S&P and Dow Jones, should I buy Nasdaq when the setup appears?
Well, that's quite interesting, really. It shows that the stocks that make up the Nasdaq are those sort of stocks that are bullish at the moment. So you very well may be correct there. Put the 5 minute up as asked. Right. Oh, I see, yeah. Well, there's a minor setup there. You probably wouldn't be able to spot this, but first of all, you've got to move up, which makes you vulnerable. Then you've got a bit of an increase in volume here, and that's brought a signal up. So it must be supply of some sort. Correct. What's that say, supply? Right. Then it carries on up, but look at the no demand coming in. Right, no demand. And there's even a signal there, look. Supply. And of course, there's your no demand. Look, up bar, narrow spread. Very low volume. That is definitely no demand. Now that's a setup for the short side. And it's a setup because of this rally here. When you have a bull move up and a rally like this, you become vulnerable to one or more professional groups or players thinking, right, I could sell here in this area now and make a profit by shorting it and covering whenever. And there's a good setup, look, for the short side. But whether you will be awake at that time, I'm not sure. But look, first of all, you've got an up move. Eh?
That's the market open here.
Oh, is it? Oh, yeah, sorry, yeah. Peter just said there's the opening of the market. Okay, so there's your up bar, look. Although the market's just opened, you'd expect the volume to be fairly high anyway, but there you are. It's amazing how it seems to work regardless. So up it goes. There's a signal there, automatic signal. Right, professional people will be fully aware of that. So up it goes. Momentum has driven that up. Look, widespread. But look at that low volume. That's clearly no demand. Right, this is the opening. 5 minute opening of the S&P. Then up it goes. The spread is narrowed, closed in the middle. There's even another signal there. Supply. Right. So this is a sequence for the short side. Down, and then this is the no demand, narrow spread, virtually very, very little volume, look. That is a very, very clear sequence for the short side. And on that, off it comes. Now, you'll always get this where it falls down to a point like this, and it seems to start wanting to go up. But that's what we call that an automatic rally. And it's because it's like dropping a tennis ball on the ground, right? You just drop it, and it'll automatically bounce up. Sorry, it's running live. Okay, now, so if you watch these bars, you'll see they're going up on no demand. Here, there's definitely no demand. And also notice how the spreads have narrowed or are narrowing. So that coupled with this very clear setup over here tells you the market's still weak. And then off it comes again. Now when you get a green arrow like this, I haven't got access to a programmer, so I can't change these, but they shouldn't appear unless the next bar is up. And it actually tells you that in the dialog box somewhere. Can you see it? That's right, so keep that in mind. It's a very simple change in the program, but the way Gavin handles things, I just haven't been able to get it done. Anyway, the market's fallen down to this point here, where we do get stopping volume, look. That is stopping volume. Why is it stopping volume? Because you've seen the market fall a reasonable, substantial amount. Enough for those professional traders that scalp the market decide they can cover their short position now and buy into this market, assuming they could get a rally out of it. And that's it in work. Look, there it is. There's the high volume. It's dipped down. The low is in fresh low ground. But the main essential is that you've got this fall behind you. It doesn't look a lot, but it's enough to make them interested. Actually, there's no hard and fast rule when they're going to come in, but you can see them coming in. It's fairly clear there. Look at that high volume, high activity. And on that activity, look, it's closed near the high, and the tail is right down below, and you've also got a signal. Well, it is a shakeout, really. Next bar's also got a signal on it. Shakeout. Now, this is colored black because it hasn't gone up or down, so when it's level, it's colored black. Now, there's a red down bar. This will be low volume. Is it low volume, Pete?
Yeah, it's the average, it's not high.
Well, it's not high. Okay. And then up you go. Now the same or similar, now there's a tester in a rising market. Whenever you see these red down bars, clearly a test, look. They rammed it down, closed near the high, the volume is not high. Right, with the strength in the background. That indicates this market wants to go up. Next bar's up and a wide spread, as Gavin calls that, it's really a gotcha bar, because they don't want other people in on the trade if they can help it. And they know how people think. They get trapped in up here and they think, oh God, I missed that now, right? And they do nothing. And that's why you get these wide spreads up like this, close near the high, after a sign of strength. And they've even another test there, look. Now, it's up. You will get a similar sequence when this rally is ready to finish. You'll see high volume coming in, similar to the setup on the previous high. It'll happen again. It happens all the time. It repeats itself. There it is, look. There's the rally. There's your high volume coming in. Stopping volume. There's your signals. There's a no demand. Because that's how the market works. And the same thing will happen again. Now the 5 minutes seem quite good. But if you sit here and watch this 5 minute, if you want to know when that market's finished going up, that's what will happen. You'll get a sequence of events where the up move has encouraged the professional traders to think, right, I'm going to take some profit now, especially if they're not sure, which seen by the action of that hour chart, that whipsawing like that, it doesn't look as if anybody's in real control. So they'd be a bit nervous, and they may very well see a rally like this or finish up exactly the same way as the last one. You'll see supply coming in. They try to mislead you. It'll go up, right? It'll go up, perhaps come off a bar or two, then go up on no demand. And that's, very few people in the world can read these markets like that. They know that. And most people look at it and don't see a thing. But remember, a chart is a language. It's talking to you. Learn the Braille, should we say, and you'll be able to read these markets. Not always 100% clear. Now, are there any questions about that?
So Gregory has asked for the Dow YM 15 minute, and Peter's just put that up, Tom. That's the 15 minute of the Dow. We have at the moment a wave up on decreasing volume. Does it really show a weakness?
Sorry, what was the question?
So it's going up on decreasing.
Yes, you're quite right.
Is that weakness?
It is. It is. When a market goes up, and if you notice, you see right on the low here, admittedly there's a bit of high volume here. So there was a bit of buying here, especially backed up by a signal, look. Shakeout. Yeah, now especially when you've got a signal to back it up. But we know that for that market to turn around and go up, it needs to float up like this, just as it is at the moment, look. It's obviously going up on no demand. It's going up on no enthusiasm to the upside, seen by the volume. The spreads are narrow. It should, if it floats off to this level here, and that volume has now disappeared, what that means is that the supply during that move up there and back down has removed the supply in the market. And because the market moves on supply and demand, if there's no supply, no professional selling, right, then that market will go up. So that's interesting. Obviously, it's far too early to jump in and buy or do anything with that, because you must see them tested. And if this market is still basically bearish, then sometimes the market just gets here, and then if you get a wide spread down on a slight increase in volume as it rushes towards these areas, that's bearish. But if it gets down here, especially if the spread is narrow and the volume is clearly low, that's especially less than this here, because you're comparing the volume when it reaches back down to this level with this, then it'll go up. That's the laws of supply and demand. Okay.
Question here from Chris. Hi Tom, when I trade the test bar in an uptrend and I put the stop below the previous bar, I get stopped out on many occasions. Is it better to put the stop 2 bars behind?
Well, this stock business, see, you said you placed a long trade on the test. Right. Well, if you've done correct, the market will not catch a stop. If the market's bullish, really bullish, if you've made the right decision, a stop will not be caught if it's on an odd number below the low of the test. If it gets caught, you probably made the wrong judgment. It's probably not a proper test, or it's a failed test because the market's bearish.
So it's a statement here from TP. You always want to buy the stronger market and sell the weaker market when there is a setup in the indexes. You got anything to say to that, Tom?
What, in stocks? Well, basically that's true. You need stocks that are acting in a strong bullish manner, which is only common sense when you think about it. You don't want to dabble in stocks that are not responding to the index. They're not responding for some reason they know and we don't know, because there's so many very clever professional people looking at this stuff, and they're there to make money for themselves, and they're not going to let bargains slip by, I can assure you that. No way.
A question here from Pete. He's referring to this bar here, I think. Hang on. Yeah, I think you mean this one, don't you? Here, you see, Tom, it's got a green signal which says shakeout. He's saying, is that really a no demand bar?
Yes, I'm sorry, it's a computer program. That's obviously no demand. It's not a shakeout. It's no demand because the volume is low. The majority of the bar, whenever you see the majority of the body of the bar higher than the close of the previous bar, right, look how it's closed on the high, that's no demand. So that signal as such is not correct. There's not much I could do about it. But however, next bar is not up, it's down.
Also the location of it in respect to whether the market's come down or not. Right, Tom?
So what was that, Peter?
Expect the market to come down before a shakeout.
Well, you do get shakeouts in the rising market. But it just doesn't look right here at all. But if that was a proper shakeout, are you talking about shakeouts or testing? See, they're both shakeouts, but the proper test is when they can see it's bullish. It's not a shakeout as such, it's just a simple test. Just a way of trying to catch a few more stops, misleading a few extra people. Right? They're probably fully aware that market would be strong. That's a proper test. Now a shakeout is different. A shakeout is like a test but more violent. And that would probably, they will be on some sort of bad news. And that's usually when they got difficulty getting higher prices. So keep that in mind.
Okay, folks, any questions to come in? We're lacking questions. Any principles? Let's have a look at gold then. If I can find it. Right. Now that's up to date to yesterday. So that's the gold
That's up to date, yes.
future. Big picture. There's the big picture. Anything to say, Tom?
Well, the only thing I could say, which is fairly obvious, it's still in a downtrend. You're overbought at the moment. You're above that trend line, which is fairly well established. However, saying that, there is a bit of support here has arrived. I would expect this market to fall somewhat, but go sideways until it's sorted itself out. I would not say, right, now's the time to buy, now's the time to sell. This market will probably drift off and start going sideways until it sorts itself out. But it's obviously been a downtrend look. Somebody asked about what about the KG chart on this? Yeah. It's always worth looking at the KG chart. What's this, red?
In the middle is green. On the outside we've got a bit of red.
Right, so red, so that's a warning that this gold price may easily drop off because it's portraying bearish volume. So it's overbought. It's highly likely to drift off. And then if that volume becomes green, it could easily then start drifting sideways. But that volume, look, is bearish volume. And that's not, you'd be very, very ill-advised to go against what the KG chart is telling you. You don't buy when the volume is bearish. That's for sure.
So Michael's asking for Apple on the daily. Let's have a look. Apple. So that's the longer term, and I'll put less bars up in a moment.
Certainly in a bullish move, but there's high volume here. It's there, isn't it? Right. Yeah. Okay, now that high volume, one thing, I would say it's bullish. Why? Because it's absorption volume from these highs here. In these markets, you'll get thousands of traders that are in these highs. They probably got a bit nervous. The news is probably bad, right? Now, what the professional trader that's long, it doesn't want to have to absorb buying at these heights from these locked-in traders. So they gap it up. And if they're bullish, they will absorb any selling. And notice the very next bar, look, they test it. That's a giveaway. That's bullish. That is a giveaway right there. They see the high volume as plainly as we can see it now. Next bar's a test. When you see that, you know that market's bullish. Interesting.
A question here from Thomas, because you were on the KG chart. When trading intraday, what time frame should we use for the KG chart?
Well, unfortunately, there's no KG charts, only intraday charts with Trade Guide. Now, the reason for that is that I instructed the programmers what to do here, but some time ago, 15 years ago. And at the time, I didn't realize, although I knew the KG chart was important, but I didn't realize how important. And there are other issues to attend to as well. So it finished up only being put on the end of day charts. But end of day is good because it gives you a roadmap of where you're likely to go. And then you can trade your intraday charts on the knowledge of where really you want to go. Are you heading north, south, east, or west? Well, you can't go west. But I suppose it's either usually north or south. I mean, people new to these markets say, well, look, the market can only go up and it can only go down. So surely I stand a good chance here of making money. But they don't understand all the other issues involved. I know that you can get two traders and say, look, you go short and you go long. And you think, well, one of them's got to make money. But very, very often, and I mean very often, they'll both lose money. So that tells you immediately there's something more to trading than just getting the direction right. You're up against human emotions. You're up against how, that's why the market's whipsaws and does what it does. It's shaking people out all the time. Now what's this up?
Well, this is a corn future.
Right, well that's bad. Whenever you see these huge gaps down like this, you want to keep away from these because of serious weakness there of some sort. They'll never tell you what it is, but there's also a serious weakness in the supply and demand chain there. And that's why it's drifted off like this. So you want to keep clear of any of these charts with these huge gap downs like this.
This is crude oil people are quite interested in. The future of crude oil.
Right, now I must admit I don't follow. Gavin loves crude oil. You done it? No. Sorry, touch the wrong button, it shoots around.
Do you want S bars now?
Yeah, I would do, yes. But it doesn't matter whether you look at oil or cotton, they all work the same way. They work on supply and demand. Now even here, look, you can see clearly there's some supply present here, look. You've got two up bars on very clear increase in volume. Right? And that's why it's fallen off. The same would be over here, look, somewhere. There'd be high volume on that bar. There it is. And that's why it drifted off. These work just the same way as stocks, the S&P 500. They all work on supply and demand. If there's supply in the market, that means that more people are selling than buying for reasons that we don't want to know, because we can see it happening here. That market's weak, it'll come off. And they couple all that up with the news and everything, rumors, put you off. And inevitably it's followed by no demand. So there's your high volume. There's your no demand. Right, that's why it's come off. And at the low here, on this chart, you've got several signals that come in. There's little or no selling pressure.
It would have come in, but
Yeah, next bars.
next bar's the wrong way. There is no supply.
That's right.
So is that.
yeah, right. But here, there is supply present, look. You can see the high volume, look. That volume there is almost as high as some of this here. So always think of supply and demand. But if you want to delve into it, the news and one thing or another, they won't tell you that. There'd be other reasons. What is this? Oil. Oh, oil. You'll never be told the truth. If there's something that they positively know, you won't know. They'll probably tell you the opposite. Same as we saw the low on British Petroleum. When it went down into low fresh ground, the spread was narrow, the volume was very high, a green signal came up, sign of strength, but the news was so bad, Libya was taking over, all the news, BT was, British Petroleum was so weak that it was going down the pan. They never band around the word millions these days. It's always billions, right? But we know now, we had great suspicions when it happened that they'd actually plugged the leak in the floor of the Gulf of Mexico. But they didn't tell you. They kept pouring out all the bad news. But the professionals knew, and they moved in, and you had a substantial rally. Now we know that's true because we had an engineer we asked from British Petroleum at a seminar we did in London, and he smiled and nodded his head and one thing and another. So we more or less our guess, which it was a guess, of course, but professionals knew something. I mean, I suppose you call that inside trading. It was interesting.
You were talking about KG charts earlier. Thomas says we have KG on the NinjaTrader plugin for anyone who's interested. Can you go back to corn? Because TP says at some point corn will find a bottom and snap back. Even though you stay away from charts like this, there is some point where it gives you an indication that it's bottoming. What would you be looking for to get comfortable to start watching the chart for a setup on corn?
Well, if we saw a clear setup, we'd probably get an alert out for you. But you can see it's just drifting down. There's obviously no professional involvement yet, because for professional involvement is the only thing that's going to turn this thing up. You need to see a down bar, right, narrow spread or a shakeout, right, massive volume, very high volume, on that volume, close in the middle or even high, next bar starts to go up. But even that's too early to go in, because you need to see a test of the supply. You need to see it'll probably go up a little bit, arc over, right, and then fall back down to that level. It's a level that's important. Then when it reaches that level, if the volume is then low, it's telling you that the supply that was present, probably caused by a shakeout, right, the market is now bullish. However, if you see that sequence of events, but instead of the volume being low, you suddenly saw a widespread down as it raced towards that level on an increase in volume, that's bearish. In other words, you get even lower prices. But whatever you read about this news-wise, you can't believe it.
The euro. Craig is asking for the euro. I mean, we'll put the daily up, but if you want us to, if you want a particular time frame, intraday, then we'll do that. Just put it in the question box.
Well, immediately you want to know if that is bullish or bearish. Right, well, you look back here and you can see there was some stopping volume. However, I'm saying that, look, there was very high volume on this up bar and high volume on this down bar. They saw that, so they tested it, look. That's a test of that high volume there. They can't go up when there's high volume present unless they know it's disappeared, and that's why they tested. It's gone up. It's a bit reluctant to go much higher. It's drifting along this top trend line, and there's certainly not a lot of demand here. I would think that would want to come back down, at least test this high volume here. I certainly wouldn't be interested in that at the moment.
Craig's saying that there was a end of a rising market yesterday on his chart. Do we have any other charts for EU? We're just going to put the future up and see. There's no daily, he's saying. It's E for egg. Keep going. Daily. Yeah, we haven't got one. Saying /EU.
The US dollar against the European Union. Yeah, so we've got the future for the euro. And of course, that's the euro against the American dollar. So is that the same chart you're talking about, Craig? I'm only asking because Tom's saying that could be there something, but it's not really the end of a rising market, is it? Surely.
I mean, the volume's not huge.
No, it needs to be
A bit higher, I think.
And narrower.
yes. Is that the right time frame though?
What's Craig?
Yes, it is. It's
Yeah.
a chart.
So what do you say to that, Tom? This chart?
Well, this is the future. Are you looking at the cash market?
Cash is here. Is the cash here?
Yeah, well, that top there is a narrow spread. It is beginning to look like the end of a rising market signal, doesn't it? Yes. So you certainly wouldn't want to be long on a chart like that. And we've got sign of weakness here. What's this, a euro? You've got, certainly got a sign of weakness there. There's not a lot of selling pressure on that bar, but it goes up. Notice how the volume has increased slightly. But here, this could very well be the end of a rising market. It would be, definitely, if that volume was higher. But that could be just no demand there.
Well, it's not no demand, Tom. It's not lower than the previous bars.
Yeah, you can see it's a lot lower than this. The volume is clearly lower.
The indicator rise at the end of a rising market normally isn't that high volume.
Yeah, and it's a very narrow spread closing the middle usually.
Yes. See, you're not looking at some mechanical mathematical formula here, but you've only got to look at that. And even you could almost forget about a lot of these so-called principles. But you can see there's definitely weakness there, look, for example. Right? Then it drifts up. And you could clearly see this is not enthusiastically going up. The spread is narrow. It's overbought. It's closed just off the high. and there's not a lot of demand there. Although it's not obviously low volume, you can see the volume's falling off. So that would be weakness. Okay.
Craig's suggesting it could be a difference in data sources on the volume. He's using real-time data. This chart we're using real-time data, but on the futures we're using e-signal. LNE suggests it might want to test the 1331 area, which, Tom, is that sort of here, which it might want to. She may be suggesting because of that very high volume on this bar here.
Yeah, but the weakness is on that bar here.
Do you want to say something?
No, I think that statement may be a little bit back to front. Here's the weakness here, look. Right. Professional money involved in this would see this. So they hold the market up when it drifts. Then the next wave up, it's marked up. But there's the weakness there. That's no demand, because you could see how the volume's fallen off. Now, the volume definitely varies according to different data feeds. Now, whether it's skullduggery going on, I'm not sure, but I don't see why it should be vary, but it does. But VSA gets away with a lot of it because it's relative volume, relative to the previous volume. And even if they manipulate the volume, they've got a job to change that view. I would say that last bar there's weakness. The last blue bar.
Any more questions? Anybody got any other questions about principles or a particular chart? Do type into the box.
What's the S&P done now?
I know. Tom's asking what's the S&P up to. Let's have a look.
Oh, there was a question came in on the last chart.
Oh, which chart's that?
Oh, that was the euro, wasn't it the euro that we had? We could quickly click over to that. Click over to that chart on the end of day. Yeah, so Sydney's asking, would the last bar be a no supply then? Well, the last bar is today, so it's not finished at all. But would it be, Tom, if it did finish like that last bar, would that be a no supply?
I think you need more evidence than that. I mean, we all know you've got to be very careful Friday because they lean over backwards very often to mislead you and the media about these markets. They're not there to help you, and they do their utmost, believe me, to mislead you. They'll never admit to it, of course. Never. But you need more evidence. You need, for that market to be bullish, you need to test this weakness here, look. And that volume, look. It's that caused this market to drift sideways. It's been marked up on a moment where there's no pressure in the euro. But these up bars, overbought, narrow spread, no demand as it went up, look, is confirming that is weak at the moment. Now, to become strong, we'd have to come back down to this area level, somewhere around here. And the spread is narrow and the volume is clearly low. Then it might respond up. But you're overbought.
There's another question on it, Tom.
Yeah.
Which might be From Sajid says, doesn't the volume look bullish because we have average or above average volume on up bars but low volume on down bars?
Well, that's true. That is bullish volume. That's why it's going up. That's why the market's going up, look. But they hide the weakness. They're there to make as much as they can out of you and other traders. Therefore, they try to, well, they do it quite successfully. They tend to hide the weakness quite well. It's not a KG on this, is there? It's all bullish, isn't it?
Yes, so far.
Yeah, the volume is bullish, I must admit. So you have to be careful. You'd be ill-advised to trade against what this KG chart is telling you. When it's green, the volume is bullish. In other words, it's expanding volume on up bars while decreasing on down bars. However, hidden behind there, if there's any weakness, it'll suddenly appear. And that's why you get these so-called up thrusts and these wide spreads down, close on the low. The weakness is hidden within there. But it will then show up on this KG chart. But I think the KG chart is very, very important for you to keep an eye on. It's certainly a great hand holder because you can easily be influenced into getting a wrong, should we say, gut feeling of what this market wants to do. Very easily. And it's difficult to go against your own judgment. I always say you can't trust anybody in the stock market, and that includes yourself. So it's very important to watch it. You would be very ill-advised to trade against this KG chart.
Yeah, so my opinion actually is, can you stay on that a minute, is, you know, looking at, not that one, back, the normal chart, looking at that chart, there's nothing, if you were thinking about going long or short, there's nothing there to say that. You know, you can say, well, yes, there's weakness, but if there is weakness, I want to see a change in its action, a change in its direction first, and confirmation of that. Likewise, if it's bullish, I'd want to see confirmation of that. And you'll see a signal, and what you've really got to look out for is very, very high volume. And what did the market do on that high volume? Did the market turn around? Or did the market test it and continue on up? So there's nothing there that's obvious at the moment. But yes, it might be weak, but you need to see confirmation of that. So the Dow, D-O-W, that's Dow Chemicals, isn't it? I think, Edmund, because I picked that out. No, it's down there. It's down. Keep going. Dow. Keep going. D-O-W. There you go. Dow Chemicals. Yes. There was a beautiful setup right at the bottom there. There's your you got this massive volume. This is the kind of volume that you've got to be looking out for. And then you get your I saw this, and you get this lovely test of that high. It's a beautiful example of a setup to go long, test of that high volume. And yes, the market then moves on up and it tests. You see, every time you get these signs of weakness, it then tests afterwards. So Tom, Edmund would like you to look at this. It's a very strong stock. Dow Chemicals.
Oh yeah, Dow Chemicals, yes. Well, Reese's quite right. It's a very powerful, there's stopping volume here, look. Right, that fulfills all the stopping volume. Went sideways a few bars. Right, and then you get this test. So I can't see it very well, but the volume's low, isn't it? Well, it's all right. Okay, and on that it responds up. But then if you're bullish, you'll suddenly see what we call a test in a rising market, especially after a red arrow. Well, I think we've mentioned this several times recently. As soon as you see a test, no supply, it's telling you, and the markets move on supply and demand. If there's no supply, it means it wants to go up. So there's even another arrow here, look. Right, so if that's true, where's the test? So there it is. All right.
But couldn't you say that that could possibly be a test? Because the volume is very low and a lot of the bar is below the close of the previous bar.
Yeah, possibly, but they do like to be careful, believe it or not, because of the amount of their holdings would normally give a normal trader a heart attack, what they carry. So they have to get it right. And that is obviously correct. Those tests look telling you. But the reason is, of course, you've got this at the bottom here. This hasn't disappeared. It may disappear to people that can't read charts or even know what it means. Right? But it's there. And these are tests, and up it goes. This is obviously a very bullish type stock. It's even acting stronger than the index.
Okay, we're running out of time, but Eleanor's asking, we'll put WLT up.
Well, I look at that immediately and shudder. Not the sort of stock I would want to be long on. You may get a bit of an up move, but not much. There's too much weakness in the background. I mean, this here is a clearly up thrust, very serious sign of weakness. The gap down is serious weakness. The widespread down, close on the low, on that increase in volume is weakness. Every time you get a blue bar up, it's going up on no demand. The red, the down bars are in red, look. They're vigorously marked down. That is not the sort of stock you'd expect to show much bullish movement. What is this called?
WLT. Don't know what it is.
Yeah.
Ask Eleni what stock it is.
What stock is this, Eleni? We're waiting.
Walters Energy.
Oh, Walton Energy. I used to know all these stocks. I used to know every one that made up the S&P 500. But because I haven't been closely involved for many, many years, they pull out stocks and put new ones in. So I'm not sure about that one. But I'm familiar with charts. And the chart tells you the truth. There's something there that they don't like at the moment.
Okay, thanks, Tom. All right, folks, that's time's up now, so we'll be here next week. As usual, we'll be doing the newsletter, I think, this week, and
If we haven't answered it, we don't know yet.
not sure which day, but Rita's saying if there's questions that we haven't answered, we apologise, but put them in the forum, the VSA Club forum. We'll have a look.